Did you know that even intelligent investors spend only 6 minutes researching a stock before making investment decisions? Hi, I'm Justina and I'm a mom of two who 10x'd her monthly income by going from financial chaos to investment discipline. I share my real investments publicly because I learned everything through painful mistakes, and now I know that anyone can achieve financial freedom if they simply decide to. The biggest investment mistakes are made because of lack of knowledge. They're made because of invisible psychological traps that control our money decisions without us even realizing it. Today, I'm going to show you exactly which psychological biases are secretly controlling your financial decisions and how knowing about them will help you make smarter, more profitable choices. Here's the best part. Once you understand these patterns, investing becomes so much more simpler. And we can absolutely do this together. So here's the shocking research that changes everything. A recent research by two finance professors analyzed over 8 million clicks from people researching investments. The results? People spend only 10 seconds looking at critical risk factors. Just 2 minutes evaluating fundamental financial health, and 70% only focuses on mainly the last few days of stock price movements. Meanwhile, professional investors spend hours, sometimes days, weeks, methodically analyzing every aspect of the company. They understand that a detailed analysis isn't just nice to have, it's absolutely essential. But here's what's fascinating. This isn't about intelligence, it's about psychology. The 8 psychological traps that control your money, and you must know about. The first one is recency bias. The what happened yesterday trap. We overvalue recent events. If a stock jumped today, we think it's a great buy, but we're missing the bigger picture. How has it performed over the years? Professional tip: always zoom out and look at the long-term trends, not daily fluctuations. Second, attention bias. The headlines hypnosis. We only focus on companies making headlines. Everyone's asking about Nvidia, Palantir, or whatever stock is trending on social media. But the best investments are often the boring, steady performance that never make the news. The third one, overconfidence bias. I know better syndrome. We think our intuition is better than professional analysts who do this for a living. Sometimes gut feelings help, but investing that is based purely on emotions and beliefs rarely leads to financial success. The fourth, confirmation bias, the echo chamber effect. We only seek information that confirms what we already believe, ignoring anything that challenges our opinion. This keeps us stuck in bad investment decisions. Then fifth one is loss aversion, the fear paralysis. We are more afraid of losing money than we are excited about making it. This prevents us from taking even reasonable, calculated risks. And ironically, this fear of losing money often keeps people from starting to invest at all, even in broadly diversified funds. Sixth one is herding mentality, the everyone's doing it trap that we buy because everyone else is buying, regardless of whether it's a smart decision or not. We just want to feel safe and with the crowd. Number 7, we have anchoring bias, the first price obsession. We get stuck on the first piece of information we receive, like the price we paid for a stock, and use that as our main decision-making reference, even when circumstances change completely. The 8th one is information overload, or the analysis paralysis. We think more information equals better decisions, but too much information often just confuses us and prevents us from taking action at all. And here's the simple solution that beats psychology. Here's the beautiful truth. There is a way to sidestep almost all of these psychological traps, and it's index fund investing. When you invest in a broadly diversified ETF that tracks indices like the S&P 500 or global index, you are buying either 500 or more than 3,000 companies in one purchase. You get automatic rebalancing by professionals, you get the companies that must meet extremely high standards to be included, and you get a strategy that removes emotional decision making. For example, with one ETF purchase, you could own piece of the world's strongest companies, automatically diversified and professionally managed. So how to start right now? Starting is incredibly simple. First thing, you need to open up a brokerage account, which takes around 15 minutes with this current technology, or maybe you already have one but haven't started anything. The second step is to search for broad market ETFs. Examples might be something like SPYL, BWCE, QDVE, ANAV. The third one, you can start with as little as the price of one share, and the price for it might also not be huge, considering that you actually get more than 100 shares in one basket. As example, SPYL ETF costs just around 13 euros. The fourth step is the hardest part. The hardest part isn't the technical process, it's overcoming the psychological barriers that we just discussed. Now let's go to the real talk, my journey. I made every single one of these psychological mistakes. I chased trending stocks, sold in panic, bought high because of FOMO, and avoided investing for years because I was paralyzed by fear and information overload. But once I understood these biases and switched to simple, diversified index investing, everything changed. I got the calmness, I got my mind back. I've been consistently investing 100 euros monthly for over 12 months, and I'm sharing this real portfolio with everybody who struggles to grasp how investing works. You can follow that exact 100 euros and get notifications every time I do something there. If you want to do that, subscription is for free. You just need to use the same broker that I do. I share this portfolio, which was specifically made for others to see that investing is not only a theory, it really works in real life. So for the resume, let's do this power shift. And here's what changes when you understand investment psychology. You stop being controlled by daily market noise. You make decisions based on data, not emotions. And you focus on long-term wealth building, not just quick wins. You sleep better knowing your money is working systematically. The biggest strategy isn't losing money on bad investments, it's never starting because psychological barriers convinced you that investing is too complicated or too risky. But now you know the truth. The barriers aren't real. They are just psychological patterns that can be recognized and overcome. So every successful investor started exactly where you are right now. The difference, they decided to begin despite the fear, despite the uncertainty, and despite not having enough knowledge. So here are your few action steps. Recognize which of these biases affects you the most. Choose the broad market index fund. Just search through Just ETF page or through my channel, or just give me a question below. And the third one, start with whatever amount feels comfortable. Even the first 100 euros will make you an investor. The fourth step, set up your own personal minimum monthly investments. Either it's 100 or 2 or 500. Focus on time in the market, not timing the market. Remember, you don't need to be perfect. You don't need to know everything. You just need to start. The market rewards time and consistency, not perfect timing and complex strategies. So tell me, which psychological bias resonates most with you? Drop a comment below and let's build a community of confident, informed investors who support each other's financial freedom journey. Your future financially free self is waiting for you to take that first step. So let's do this together and see you in the next one.